Question 1. Which of the following best describes the principle of indemnity as applied in insurance? A. The insured is compensated for the actual loss sustained up to the policy limits without gaining financially. B. The insured receives the replacement value of the property regardless of the actual loss incurred. C. The insurer promises to cover any potential risk without requiring proof of insurable interest. D. The insured is entitled to both the replacement cost and additional compensation for emotional distress. Correct answer. A. The insured is compensated for the actual loss sustained up to the policy limits without gaining financially. Explanation. The principle of indemnity ensures that insurance compensates only for the actual loss incurred, avoiding any financial gain to the insured. This principle discourages moral hazard and aligns with the purpose of insurance as a tool to manage risk. Question 2. Mr. Thompson, a licensed insurance agent in Virginia, receives an inquiry from a client asking about rebates if they purchase a homeowner's policy. Which of the following actions should Mr. Thompson take to remain compliant with Virginia insurance regulations? They offer a small rebate as a gesture of goodwill. B. Inform the client that offering rebates is prohibited under Virginia insurance laws. C. Agree to rebate but document it clearly in the policy. D. Offer the client a discount on the premium and record it as a promotional expense. Correct answer. B. Inform the client that offering rebates is prohibited under Virginia insurance laws. Explanation. Rebating or offering a client a benefit not specified in the insurance contract as an inducement to purchase is illegal in Virginia. This practice violates Virginia Code SS 38.2509, which prohibits unfair trade practices in insurance marketing. Question 3. Which of the following is a key feature of an aleatory insurance contract? A. Both parties provide consideration of equal value at the time the contract is formed. B. One party may receive significantly more in value than they provide, depending on an uncertain event. C. The contract is voidable by the insured at any time without cause. D. Both parties must agree to changes to the policy for it to remain valid. Correct answer. B. One party may receive significantly more in value than they provide, depending on an uncertain event. Explanation. An aleatory contract is characterized by unequal value exchanged between parties, contingent on an uncertain event, such as a loss. Insurance contracts are aleatory because the insurer's obligation to pay is triggered only if a covered event occurs. Question 4. Which of the following is required for an insurance agent to maintain their license in Virginia? A. Completing 12 hours of continuing education every year. B. Renewing their license every 2 years and completing state-mandated continuing education. C. Completing a one-time ethics course during the first year of licensure. D. Maintaining a record of all policy sales but no ongoing education requirements. Correct answer. B. Renewing their license every 2 years and completing state-mandated continuing education. Explanation. Virginia requires licensed insurance agents to renew their license every 2 years and fulfill the required continuing education credits, including ethics training, to remain in good standing. Question 5. A Virginia resident files a claim under their homeowner's insurance policy for water damage caused by a burst pipe. Which coverage component will most likely handle this loss? A. Personal property coverage. B. Dwelling coverage. C. Liability coverage. D. Loss of use coverage. Correct answer. B. Dwelling coverage. Explanation. Dwelling coverage is designed to protect the physical structure of the insured property against covered perils, such as water damage from a burst pipe. Question 6. Which of the following actions is considered an unfair claims settlement practice under Virginia law? A. Promptly investigating a claim and denying coverage based on policy exclusions. B. Failing to acknowledge a claim within a reasonable time after receiving notice. C. Offering a settlement equal to the actual cash value of the damaged property. D. Denying a fraudulent claim without extensive investigation. Correct answer. B. Failing to acknowledge a claim within a reasonable time after receiving notice. Explanation. Virginia law requires insurers to acknowledge and respond to claims promptly. Delays in acknowledgement or communication may constitute an unfair claim settlement practice, violating Virginia Code SS 38.2510. Question 7. In Virginia, how does a state categorize insurance companies that are formed under the laws of another country? A. Domestic insurers. B. Foreign insurers. C. Alien insurers. D. Non-admitted insurers. Correct answer. C. Alien insurers. Explanation. Alien insurers are insurance companies formed under the laws of another country but authorized to operate in Virginia. Question 8. Which of the following is true about surplus lines insurance in Virginia? A. Surplus lines insurers are exempt from all state regulations. B. Surplus lines insurance is only available when coverage cannot be obtained from an admitted insurer. C. Agents selling surplus lines insurance do not need special licensing in Virginia. D. Surplus lines insurance must comply with the same rate approval process as admitted insurers. Correct answer. B. Surplus lines insurance is only available when coverage cannot be obtained from an admitted insurer. Explanation. Surplus lines insurance provides coverage for unique or high-risk exposures that admitted insurers decline to cover. Virginia law requires surplus lines brokers to verify that no coverage is available in the admitted market before placing a policy. Question 9. Under Virginia law, which of the following is an example of twisting in insurance marketing practices? A. Misrepresenting the terms of a policy to induce a policyholder to lapse their current coverage. B. Offering a policyholder a rebate to secure their business. C. Refusing to sell a policy based on the policyholder's risk profile. D. Bundling multiple lines of insurance to offer a discount. Correct answer. A. Misrepresenting the terms of a policy to induce a policyholder to lapse their current coverage. Explanation. Twisting involves using false or misleading information to persuade a policyholder to terminate or switch their current coverage, which is prohibited under Virginia Code SS 38.2509. Question 10. In Virginia, what is the primary purpose of the Property and Casualty Guarantee Association? A. To regulate insurance rates for property and casualty policies. B. To provide coverage for claims when an insurer becomes insolvent. C. To assist policyholders in selecting the right insurance products. D. To negotiate premium refunds for canceled policies. Correct answer. B. To provide coverage for claims when an insurer becomes insolvent. Explanation. The Virginia Property and Casualty Guarantee Association ensures that policyholders are protected when an insurer becomes insolvent. It steps in to pay covered claims within statutory limits. Relevant law. The Virginia Property and Casualty Guarantee Association operates under Virginia Code SS 38.21600 to protect policyholders from financial losses due to insurer insolvency. Question 11. What is the minimum liability coverage required for auto insurance in Virginia? A. $25,000 per person for bodily injury, $50,000 per accident for bodily injury, and $20,000 for property damage. B. $50,000 per person for bodily injury, $100,000 per accident for bodily injury, and $30,000 for property damage. C. $30,000 per person for bodily injury, $60,000 per accident for bodily injury, and $25,000 for property damage. D. $15,000 per person for bodily injury, $30,000 per accident for bodily injury, and $10,000 for property damage. Correct answer. A. $25,000 per person for bodily injury, $50,000 per accident for bodily injury, and $20,000 for property damage. Explanation. Virginia law mandates minimum auto liability coverage limits of 25, 50, 20 to ensure drivers can cover damages they may cause in an accident. These limits include $25,000 for bodily injury per person, $50,000 per accident for bodily injury, and $20,000 for property damage. Other options listed either exceed or fall short of this statutory requirement. Question 12. In Virginia, what is the penalty for driving without mandatory auto insurance or failing to pay the uninsured motor vehicle fee? A. Suspension of driving privileges until proof of insurance is provided. B. A fine of $1,000 and mandatory driving school. C. Suspension of vehicle registration and a $500 statutory fine. D. Loss of vehicle ownership and a license revocation of up to 1 year. Correct answer. C. Suspension of vehicle registration and a $500 statutory fine. Explanation. Virginia law requires drivers to maintain mandatory liability insurance or pay the uninsured motor vehicle fee. Failure to comply results in vehicle registration suspension, a $500 fine, and the need to provide proof of insurance to reinstate privileges. Question 13. Which of the following is true about flood insurance in Virginia? A. It is typically included in standard homeowners insurance policies. B. It is only available through private insurers. C. It must be purchased separately, often through the National Flood Insurance Program, NFIP. D. It is not required for properties in federally designated flood zones. Correct answer. C. It must be purchased separately, often through the National Flood Insurance Program, NFIP. Explanation. Standard homeowners insurance policies in Virginia do not cover flood damage. Residents must purchase separate flood insurance, typically through NFIP or private carriers. This ensures protection for properties in high-risk flood zones. Question 14. In Virginia, who regulates the insurance industry to ensure compliance with state laws? A. The Department of Motor Vehicles, DMV. B. The Virginia General Assembly. C. The Virginia Bureau of Insurance, BOI. D. The National Association of Insurance Commissioners, NAIC. Correct answer. C. The Virginia Bureau of Insurance, BOI. Explanation. The Virginia BOI, part of the State Corporation Commission, oversees insurance companies and agents operating within the state to ensure compliance with laws and protect consumers. The NAIC provides guidelines but does not regulate directly. Question 15. Which of the following is an example of adverse selection in the insurance market in Virginia? A. An individual buying homeowners insurance to cover a new home. B. A high-risk driver purchasing auto insurance while safer drivers opt out. C. An insurer refusing to provide coverage to a property in a high-crime area. D. An employer selecting an insurance policy with a lower premium for employees. Correct answer. B. A high-risk driver purchasing auto insurance while safer drivers opt out. Explanation. Adverse selection occurs when individuals with higher risk levels are more likely to purchase insurance, leading to imbalanced risk pools. This example reflects adverse selection as it disproportionately increases the insurer's exposure. Question 16. What is the primary function of the Virginia Insurance Guarantee Association? A. To provide financial assistance to insurance companies in economic distress. B. To help consumers find affordable insurance coverage in the private market. C. To pay claims on behalf of insolvent insurance companies. D. To negotiate policy terms and premiums with policyholders. Correct answer. C. To pay claims on behalf of insolvent insurance companies. Explanation. The Virginia Insurance Guarantee Association protects policyholders and claimants by paying claims when an insurance company becomes insolvent. This ensures financial stability and consumer protection. Question 17. Which of the following statements about Virginia's uninsured motorist coverage is correct? A. It is optional and only required for luxury vehicles. B. It is included in all auto policies unless the policyholder explicitly rejects it in writing. C. It covers the insured's injuries and damages caused by an uninsured or underinsured driver. D. It provides compensation for medical expenses regardless of fault. Correct answer. C. It covers the insured's injuries and damages caused by an uninsured or underinsured driver. Explanation. Virginia law requires uninsured, underinsured motorist coverage in auto policies to protect policyholders from drivers who lack sufficient insurance to cover damages. It is not optional or limited to certain vehicles. Question 18. How does Virginia law treat a policyholder's failure to disclose material facts during the application process? A. The insurer can cancel the policy immediately without notice. B. The insurer can deny a claim only if the omission is proven intentional. C. The insurer can rescind the policy if the omission materially affects the risk. D. The policy remains valid as long as premiums are paid. Correct answer. C. The insurer can rescind the policy if the omission materially affects the risk. Explanation. Virginia allows insurers to void policies if an applicant fails to disclose material facts that significantly impact underwriting decisions. This ensures fair disclosure practices. Question 19. Which of the following is considered a risk-sharing mechanism under Virginia law? A. Deductibles and copays. B. Reinsurance agreements between insurance companies. C. Government subsidies for certain types of insurance. D. Group insurance policies offered by employers. Correct answer. B. Reinsurance agreements between insurance companies. Explanation. Reinsurance is a risk-sharing mechanism that allows insurers to transfer portions of their risk to other insurers, ensuring financial stability. Deductibles and copies manage individual risk, not insurer risk. Question 20. Virginia law requires homeowners insurers to provide coverage for which of the following perils? A. Earthquake damage. B. Flood damage. C. Fire damage. D. Pest infestation. Correct answer. C. Fire damage. Explanation. Homeowners insurance policies in Virginia typically include fire damage as a standard covered peril. Earthquake and flood damage require separate policies, and pest infestation is generally excluded from coverage. Question 21. Which of the following is typically covered under the liability section of a standard homeowner's insurance policy? A. Fire damage to the insured's home. B. Theft of the insured's personal property. C. Medical expenses for a guest injured on the insured's property. D. Flood damage to the basement. Correct answer. C. Medical expenses for a guest injured on the insured's property. Explanation. The liability section of a homeowner's policy covers claims for bodily injury or property damage for which the insured is legally responsible, including medical expenses for guests injured on the property. Fire damage and theft and B are covered under property sections, while flood damage D usually requires separate coverage. Question 22. What type of policy would a business owner purchase to cover losses from a cyber attack that leads to data breach? A. Commercial property insurance. B. General liability insurance. C. Cyber liability insurance. D. Business interruption insurance. Correct answer. C. Cyber liability insurance. Explanation. Cyber liability insurance provides coverage for incidents related to cyber attacks such as data breaches, ransomware, and network security failures. Other policies, D, do not specifically address cyber-related risks. Question 23. Which type of insurance coverage is specifically designed to cover legal fees and settlements when a professional is sued for negligence in their work? A. General liability insurance. B. Professional liability insurance. C. Directors and officers, DO, insurance. D. Workers' compensation insurance. Correct answer. B. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions, EO, insurance, protects professionals against claims of negligence or inadequate work. General liability, A, covers physical injuries and property damage, while DO insurance, C, covers company leadership and workers' compensation. D, pertains to employee injuries. Question 24. Which term best describes the portion of an insurance policy that states the insured's obligations in the event of a loss? The insuring agreement. B, conditions. C, exclusions. D, declarations. Correct answer. B, conditions. Explanation. The conditions section of an insurance policy outlines the responsibilities and obligations of both the insurer and the insured. This includes what actions must be taken when a loss occurs, such as reporting and providing proof of loss. Question 25. Which of the following is not a function of an insurance underwriter? A. Assessing the risk of insuring an applicant. B. Determining the terms of a policy. C. Selling insurance policies directly to customers. D. Setting premium rates based on risk. Correct answer. C. Selling insurance policies directly to customers. Explanation. Insurance underwriters evaluate risks, determine policy terms, and set premiums. Selling insurance policies is typically done by agents or brokers, not underwriters. Question 26. What type of auto insurance coverage is necessary for damage to the policyholder's own vehicle in a collision they caused? A. Liability coverage. B. Comprehensive coverage. C. Collision coverage. D. Uninsured motorist coverage. Correct answer. C. Collision coverage. Explanation. Collision coverage pays for the repair or replacement of the policyholder's vehicle when they are at fault in an accident. Liability coverage. A. Covers damage to others, while comprehensive. B. Covers non-collision incidents. And uninsured motorist. D. Applies when the other driver lacks insurance. Question 27. What type of policy should an individual purchase if they want protection that will pay out benefits upon their death? A. Disability insurance. B. Health insurance. C. Term life insurance. D. Long-term care insurance. Correct answer. C. Term life insurance. Explanation. Term life insurance provides death benefits to beneficiaries if the insured passes away during the term of the policy. Disability insurance. A. Covers lost income due to inability to work. Health insurance. B. Pays for medical expenses. And long-term care insurance. D. Covers extended care services. Question 28. Which insurance concept refers to the transfer of risk from an individual to an insurer in exchange for premium payments? A. Indemnity. B. Reinsurance. C. Risk management. D. Risk pooling. Correct answer. A. Indemnity. Explanation. Indemnity refers to the concept of compensating for a loss, effectively transferring risk from an individual to an insurer who accepts it in return for premiums. Reinsurance. B. Involves risk transfer between insurers. And risk pooling. D. Spreads risk among a group. Question 29. What is the purpose of an insurable interest in an insurance contract? A. To determine the insurance policy's deductible. B. To ensure the policyholder can receive coverage for any risk. C. To prevent policyholders from profiting from insurance fraud. D. To set the maximum claim amount. Correct answer. C. To prevent policyholders from profiting from insurance fraud. Explanation. Insurable interest means that the policyholder must have a legitimate interest in the insured item or person, preventing them from obtaining insurance to profit from a loss. It ensures a genuine economic stake exists in the preservation of the insured property or person. Question 30. Which type of homeowner's policy is specifically designed for renters? A. HA2. B. HA3. C. HA4. D. HA5. Correct answer. C. HA4. Explanation. The HA4 policy, known as a renter's policy, provides coverage for personal property and liability for individuals who rent their homes. Other policies, HA2, HA3, HA5, are tailored for homeowners. Question 31. Which insurance principle states that an insured should not profit from an insurance claim but should be restored to their original financial position? A. Subrogation. B. Indemnity. C. Utmost good faith. D. Contribution. Correct answer. B. Indemnity. Explanation. The principle of indemnity ensures that an insured is compensated for their loss but does not profit from the insurance claim. It aims to restore the insured to their financial state before the loss. Subrogation. A. Allows insurers to take legal action on behalf of the insured. Utmost good faith. C. Refers to honesty in disclosing relevant information. And contribution. D. Involves multiple policies sharing the loss. Question 32. Which of the following insurance policies would provide coverage for a company if its executive officers are sued for their decisions and actions while managing the company? A. General liability insurance. B. Errors and omissions. EO. Insurance. C. Directors and officers. DO. Insurance. D. Employment practices liability insurance. Correct answer. C. Directors and officers. DO. Insurance. Explanation. Directors and officers insurance protects the company and its executives from claims resulting from decisions and actions taken while performing their duties. General liability insurance. A. Covers bodily injury and property damage, errors, and omissions. B. Applies to professional negligence and employment practices liability. D. Covers employment-related issues. Question 33. What type of policy is designed to cover high-risk items such as expensive jewelry or fine art, which may not be fully covered under standard homeowners policies? A. Umbrella policy. B. Scheduled personal property endorsement. C. HA2 policy. D. Personal liability policy. Correct answer. B. Scheduled personal property endorsement. Explanation. A scheduled personal property endorsement allows for specific high-value items to be listed and covered at their appraised value under a homeowner's policy. An umbrella policy A provides additional liability coverage. Now, HA2 policy C is a basic form of homeowner's insurance, and a personal liability policy D covers liability claims but not high-value items. Question 34. Which of the following is generally not covered by a comprehensive auto insurance policy? A. Theft of the vehicle. B. Hail damage. C. Collision with another vehicle. D. Vandalism. Correct answer. C. Collision with another vehicle. Explanation. Comprehensive auto insurance covers non-collision incidents such as theft, hail damage, and vandalism. Collision coverage, which is separate, applies to accidents involving other vehicles or objects. Comprehensive, A, B, D, does not include collision-related damage. Question 35. What is the primary purpose of reinsurance? A, to reduce an insurer's exposure to loss. B, to provide direct coverage to policyholders. C, to eliminate the need for underwriting. D, to offer insurance to high-risk individuals. Correct answer. A, to reduce an insurer's exposure to loss. Explanation. Reinsurance is the practice where insurers transfer a portion of their risk to other insurance companies to limit the total loss they could face. It does not involve direct policyholder coverage. B, underwriting elimination. C, or exclusively covering high-risk individuals. D. Question 36. Which clause in an insurance policy outlines the circumstances in which the insurer can deny a claim? A, exclusions. B, declarations. C, conditions. D, endorsements. Correct answer. A, exclusions. Explanation. The exclusions section specifies the situations and conditions under which a claim may be denied. The declarations. B, outline basic policy information. Conditions. C, list the policyholder's responsibilities. And endorsements. D, modify the policy's coverage. Question 37. Which of the following types of insurance is mandatory for employers to provide in most states to cover work-related injuries? A, health insurance. B, workers' compensation insurance. C, general liability insurance. D, disability insurance. Correct answer. B, workers' compensation insurance. Explanation. Workers' compensation insurance is required by law in most states and provides benefits for work-related injuries or illnesses. Health insurance A, covers general medical expenses. General liability C, addresses third-party injuries. And disability insurance D, supports income replacement for non-work-related disabilities. Question 38. What is the main benefit of purchasing an umbrella insurance policy? A, it increases the deductible on existing policies. B, it provides a discount on other insurance premiums. C, it offers additional liability coverage beyond the limits of standard policies. D, it extends coverage for damages excluded from all other policies. Correct answer. C, it offers additional liability coverage beyond the limits of standard policies. Explanation. An umbrella insurance policy provides extra liability protection that exceeds the coverage limits of the policyholder's standard auto or homeowner's insurance. It does not increase deductibles. A, provide discounts. B, or cover all excluded damages. D. Question 39. Which term describes the portion of a claim that the insured must pay out of pocket before the insurance company covers the remaining amount? A, premium. B, deductible. C, copayment. D, exclusion. Correct answer. B, deductible. Explanation. A deductible is the amount the policyholder is responsible for paying before the insurer covers any claim expenses. A premium A is the regular payment for the policy. A copayment C is typically found in health insurance for services and exclusions. D are situations not covered by the policy. Question 40. What type of insurance policy is typically purchased to protect against claims that exceed the coverage provided by underlying liability policies? A, homeowner's insurance. B, umbrella insurance. C. Term life insurance. D. Comprehensive auto insurance. Correct answer. B. Umbrella insurance. Explanation. Umbrella insurance provides additional liability coverage that supplements existing policies such as auto or homeowners insurance when the policy limits are reached. It does not provide primary coverage like homeowners A, life C, or comprehensive auto insurance D. Question 41. What is the main purpose of the coinsurance clause in a property insurance policy? A. To reduce a deductible. B. To ensure that the insured shares in the risk of loss. C. To provide additional liability coverage. D. To eliminate the need for an appraisal. Correct answer. B. To ensure that the insured shares in the risk of loss. Explanation. The coinsurance clause requires the policyholder to carry a certain percentage of the property value as coverage. If the insured does not meet this requirement, they must share a portion of the loss with the insurer. This encourages policyholders to purchase sufficient insurance coverage. Question 42. Which type of life insurance policy provides a death benefit and cash value accumulation that can grow based on the performance of a portfolio of investments? A. Term life insurance. B. Universal life insurance. C. Variable life insurance. D. Whole life insurance. Correct answer. C. Variable life insurance. Explanation. Variable life insurance offers both a death benefit and an investment component, where the cash value can increase based on the performance of the chosen investments. Term life A. provides coverage without cash value. Universal life B. has flexible premiums and cash value, and whole life D. offers guaranteed cash value growth. Question 43. Which type of auto insurance coverage is mandatory in most states and covers injuries to other people and damage to their property when you are at fault in an accident? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Uninsured motorist coverage. Correct answer. C. Liability coverage. Explanation. Liability coverage is required in most states and pays for bodily injury and property damage to others if the policyholder is at fault in an accident. Collision A and comprehensive B cover damages to the policyholder's vehicle, while uninsured motorist D covers accidents involving uninsured drivers. Question 44. In a health insurance policy, what is the term for the fixed amount the insured pays for each medical service or prescription? A. Premium. B. Deductible. C. Copayment. D. Coinsurance. Correct answer. C. Copayment. Explanation. A copayment is a set amount the insured pays for a specific service or prescription, with the remainder covered by insurance. A premium A is the payment for the policy. The deductible B is the amount paid before insurance starts covering costs, and coinsurance D is the percentage split of costs after the deductible is met. Question 45. Which of the following policies provides coverage for a property owner against loss of rental income if the property becomes uninhabitable due to a covered peril? A. Liability insurance. B. Renter's insurance. C. Loss of use coverage. D. Business interruption insurance. Correct answer. C. Loss of use coverage. Explanation. Loss of use coverage compensates for lost rental income if the insured property is uninhabitable due to covered peril. Liability insurance A. covers legal claims. Renter's insurance B. protects tenants, and business interruption insurance D. is for business-related income loss. Question 46. Under Virginia insurance regulations, which of the following constitutes an unfair claim settlement practice? A. Denying a claim without a reasonable investigation. B. Offering a settlement that is less than the value of the claim to save costs. C. Requiring policyholders to file lawsuits to recover amounts due. D. Misrepresenting policy provisions relating to coverage. Correct answer. A. Denying a claim without a reasonable investigation. Explanation. Under Virginia's Fair Claims Practices Act, insurers are required to conduct a thorough and reasonable investigation before denying a claim. Denying a claim without proper investigation violates consumer protection laws. While offering a low settlement, option B or misrepresenting policy provisions, option D, can also be considered unfair practices. They are not as explicitly addressed as option under the reasonable investigation requirement. Forcing lawsuits, option C, is unethical but less common than improper denials. Question 47. In Virginia, what is a key requirement for a surplus lines insurer to be used by an agent? A. The risk must first be rejected by admitted insurers. B. The insurer must be licensed in Virginia. C. The insured must provide written consent before binding coverage. D. The agent must inform the Virginia Bureau of Insurance before placing the policy. Correct answer. A. The risk must first be rejected by admitted insurers. Explanation. Virginia requires agents to seek coverage from admitted insurers before turning to surplus lines insurers. Surplus lines are meant to provide insurance for risks not adequately covered in the admitted market. Option B is incorrect because surplus lines insurers are not licensed in the state but must be on an approved list. Option C is not mandated in this context, and option D misrepresents the agent's reporting obligations. Question 48. If a Virginia homeowner's property is damaged by a covered peril, what determines the amount paid under a replacement cost policy? A. The cost to replace the property minus depreciation. B. The current market value of the property. C. The cost to replace the property with like kind and quality without depreciation. D. The original purchase price of the property. Correct answer. C. The cost to replace the property with like kind and quality without depreciation. Explanation. Replacement cost policies in Virginia cover the cost of replacing damaged property without factoring in depreciation. Option. It describes actual cash value, while option B, market value, and option D, original purchase price, do not align with the principles of replacement cost coverage. Question 49. What is the primary role of the Virginia Property and Casualty Insurance Guarantee Association? A. To provide insurance for uninsurable risks. B. To settle claims for insolvent insurers. C. To regulate unfair trade practices among insurers. D. To offer flood insurance coverage. Correct answer. B. To settle claims for insolvent insurers. Explanation. The Virginia Property and Casualty Insurance Guarantee Association ensures that policyholders receive claim payments if their insurer becomes insolvent. Option is incorrect, as uninsurable risks are not addressed by the association. Option C involves regulatory agencies like the Virginia Bureau of Insurance, and option D pertains to the National Flood Insurance Program, NFIP. Question 50. Under Virginia law, which situation best describes vicarious liability? A. A policyholder directly causing damage to another's property. B. An employer held responsible for an employee's negligent actions. C. A landlord's liability for injuries due to tenant negligence. D. An insurer denying coverage due to policy exclusions. Correct answer. B. An employer held responsible for an employee's negligent actions. Explanation. Vicarious liability arises when one party, e.g., an employer, is held legally responsible for the negligent actions of another, e.g., an employee, due to their relationship. Option. It describes direct liability, while option C is less typical in Virginia liability law unless specified in the lease. Option D is unrelated to vicarious liability. Question 51. A Virginia policyholder is involved in a car accident where the other driver is uninsured. Under their personal auto policy, what coverage would protect them? A. Bodily injury liability. B. Uninsured motorist coverage. C. Collision coverage. D. Comprehensive coverage. Correct answer. B. Uninsured motorist coverage. Explanation. Uninsured motorist coverage protects policyholders when an at-fault driver lacks insurance. Bodily injury liability, option A, covers damages to others. Collision, option C, covers the policyholder's vehicle damage regardless of fault. And comprehensive, option D, covers non-collision events like theft or natural disasters. Question 52. In Virginia, what is a distinguishing feature of a mutual insurance company? A. It is owned by its policyholders. B. It offers insurance only to businesses. C. It is exempt from state regulation. D. It distributes profits only to shareholders. Correct answer. A. It is owned by its policyholders. Explanation. Mutual insurance companies are owned by policyholders who may receive dividends or reduce premiums if the company performs well. Option B is incorrect, as mutual insurers serve individuals and businesses. Option C is false, as mutual insurers are regulated by the Virginia Bureau of Insurance. Option D describes stock insurers, not mutual ones. Question 53. Scenario. Marcus, a Virginia resident, recently purchased a homeowner's insurance policy. A month later, he learns the insurer is non-admitted in Virginia. What is Marcus's best course of action? A. Keep the policy since it is valid under surplus lines laws. B. Report the agent to the Virginia Bureau of Insurance for illegal activity. C. Request a refund and seek coverage from an admitted insurer. D. Verify if the insurer is on the Virginia-approved surplus lines list. Correct answer. D. Verify if the insurer is on the Virginia-approved surplus lines list. Explanation. Surplus lines insurers are non-admitted but may legally operate if they appear on the approved list maintained by Virginia. If the insurer is not approved, Marcus should pursue option C. Option A might expose him to denied claims, while option B assumes wrongdoing without verifying compliance. Question 54. What is the primary goal of coinsurance clauses in Virginia property insurance policies? A. To reduce the policyholder's premiums. B. To encourage policyholders to insure property to its full value. C. To limit the insurer's liability on large claims. D. To mandate minimum deductible amounts. Correct answer. B. To encourage policyholders to insure property to its full value. Explanation. Coinsurance clauses require policyholders to insure property to a specified percentage, usually 80%, 100%, of its value. Failure to meet this requirement results in reduced claim payouts. Option A is incorrect since premiums are based on coverage levels. Option C and D do not accurately describe coinsurance. Question 55. In Virginia, what distinguishes a domestic insurer from a foreign insurer? A. The location of the insurer's corporate headquarters. B. The state where the insurer is incorporated. C. The type of policies offered by the insurer. D. The insurer's licensing status in Virginia. Correct answer. B. The state where the insurer is incorporated. Explanation. A domestic insurer is incorporated in Virginia, while a foreign insurer is incorporated in another state. Both must be licensed in Virginia to operate. Option is less precise, and option C and D are unrelated to the domestic-foreign distinction. Question 56. In Virginia, how long must an insurer retain records of its transactions according to state insurance laws? A. 3 years. B. 5 years. C. 7 years. D. 10 years. Correct answer. B. 5 years. Explanation. Virginia law requires insurers to retain records of their transactions for a minimum of 5 years. This ensures compliance with regulatory audits and investigations. Options A, C, and D do not align with Virginia's specific record retention requirements. Question 57. What is the primary purpose of Virginia's binding authority laws for insurance agents? A. To allow agents to finalize coverage on behalf of insurers. B. To restrict agents from selling high-risk policies. C. To limit the financial liability of insurers. D. To protect consumers from fraudulent agents. Correct answer. A. To allow agents to finalize coverage on behalf of insurers. Explanation. Binding authority permits agents to provide immediate coverage for clients while the insurer processes the formal policy. This ensures there are no coverage gaps. Options B and C misinterpret the concept, and option D refers to broader consumer protection measures, not binding authority. Question 58. In Virginia, which type of policy would best suit a contractor needing liability coverage for work-related accidents? A. Personal liability policy. B. Commercial general liability policy. C. Errors and omissions policy. D. Workers' compensation policy. Correct answer. B. Commercial general liability policy. Explanation. A commercial general liability (CGL) policy provides contractors with protection against third-party claims for bodily injury, property damage, and other liabilities arising from business operations. Option is for personal risks. Option C is specific to professional errors. and option D covers employee injuries rather than general liability. Question 59. Under Virginia law, what is required for an insurance policy to be canceled due to non-payment of premiums? A. A notice of cancellation sent 10 days before termination. B. Immediate cancellation without notice. C. A notice of cancellation sent 30 days before termination. D. Court approval of the cancellation. Correct answer. A. A notice of cancellation sent 10 days before termination. Explanation. Virginia law mandates that insurers provide a 10-day notice to policyholders before canceling a policy for non-payment of premiums. This protects consumers by ensuring they have time to address mispayments. Options B, C, and D are inconsistent with state requirements. Question 60. In Virginia, which of the following is a requirement for insurers under the state's Unfair Trade Practices Act? A. Provide all applicants with coverage regardless of risk level. B. Avoid misrepresenting policy terms or benefits. C. Guarantee the lowest premium rates for all policies. D. Require agents to be bonded before selling policies. Correct answer. B. Avoid misrepresenting policy terms or benefits. Explanation. The Virginia Unfair Trade Practices Act prohibits insurers from misrepresenting policy terms, benefits, or conditions. This protects consumers from deceptive practices. Option A. Conflicts with underwriting principles. Option C is not required by law, and option D is unrelated to unfair trade practices. Question 61. What is the primary purpose of the grace period in an insurance policy? A. To allow the insurer extra time to process claims. B. To give the policyholder additional time to pay a premium without losing coverage. C. To provide a time frame for policy adjustments by the insurer. D. To extend the policy coverage period by 1 month. Correct answer. B. To give the policyholder additional time to pay a premium without losing coverage. Explanation. A grace period allows a policyholder to make a premium payment after the due date without facing immediate policy cancellation. This provision helps ensure that coverage continues while the insured addresses the payment. Options A, C, and D do not accurately describe the purpose of the grace period. Question 62. In the context of property insurance, what does the term replacement cost refer to? A. The current market value of the property. B. The cost to replace damaged property without considering depreciation. C. The insured amount stated in the policy, regardless of actual costs. D. The value of the property after subtracting the deductible. Correct answer. B. The cost to replace damaged property without considering depreciation. Explanation. Replacement cost is the amount needed to replace damaged property with a new item of similar kind and quality without deducting for depreciation. This ensures the policyholder can restore their property to its original state. Options A, C, and D misrepresent the replacement cost concept. Question 63. Which type of auto insurance coverage pays for the repair of an insured's vehicle in the event of a collision regardless of fault? A. Liability coverage. B. Collision coverage. C. Comprehensive coverage. D. Uninsured motorist coverage. Correct answer. B. Collision coverage. Explanation. Collision coverage pays for the repair or replacement of the insured's vehicle following a collision with another vehicle or object, regardless of fault. Liability coverage, option A, covers damage to others. Comprehensive coverage, option C, applies to non-collision events. And uninsured motorist coverage, option D, covers injuries and damages caused by uninsured drivers. Question 64. Why is an endorsement added to an insurance policy? A. To extend the policy term automatically. B. To provide additional coverage or modify the terms of the policy. C. To exclude certain types of losses from coverage. D. To reduce the premium payment required. Correct answer. B. To provide additional coverage or modify the terms of the policy. Explanation. An endorsement, or rider, is used to amend or add coverage to an existing insurance policy. It allows policyholders to tailor their policy to fit specific needs, such as adding a valuable item or modifying conditions. Options A, C, and D do not reflect the purpose of endorsements. Question 65. What is the main function of liability insurance? A. To cover damage to the insured's property. B. To cover injuries or damages the insured causes to third parties. C. To pay for routine maintenance of the insured's vehicle or home. D. To provide a refund of the insurance premium at the end of the policy term. Correct answer. B. To cover injuries or damages the insured causes to third parties. Explanation. Liability insurance protects the insured from financial loss due to injuries or property damage they may cause to others. This ensures that the insured can compensate affected third parties without bearing the full financial burden. Options A, C, and D misrepresent the role of liability insurance. Question 66. Which of the following best describes coinsurance = property insurance policy? A. The sharing of risk between two insurers on a single policy. B. A penalty applied for underinsuring a property. C. An agreement that pays for all claims without any deductible. D. The splitting of premium payments between the insured and the insurer. Correct answer. B. A penalty applied for underinsuring a property. Explanation. Coinsurance is a clause that requires the policyholder to insure their property to a certain percentage of its value, typically 80% or more. If the property is underinsured, the insured may face a penalty when filing a claim. Options A, C, and D are not accurate descriptions of coinsurance. Question 67. What type of life insurance policy accumulates cash value over time? A. Term life insurance. B. Whole life insurance. C. Accidental death insurance. D. Variable annuity insurance. Correct answer. B. Whole life insurance. Explanation. Whole life insurance policies provide lifetime coverage and include a cash value component that accumulates over time. Term life insurance, option A, does not build cash value. Accidental death insurance, option C, provides a payout only for accidental deaths. And variable annuity insurance, option D, is an investment product with different features. Question 68. Which of the following is typically an OT covered under a standard homeowner's insurance policy? A. Fire damage to the insured's home. B. Theft of personal belongings inside the home. C. Flood damage from rising water. D. Windstorm damage. Correct answer. C. Flood damage from rising water. Explanation. Standard homeowners insurance policies do not cover flood damage. Flood coverage must be purchased as a separate policy or through specialized endorsements. Fire, theft, and windstorm damage, options A, B, and D, are commonly covered perils in standard policies. Question 69. What is an example of a peril that comprehensive auto insurance typically covers? A. Damage from a car accident with another vehicle. B. A tree falling on the insured's car during a storm. C. Damages due to driving over a pothole. D. Liability for injuries to another driver. Correct answer. B. A tree falling on the insured's car during a storm. Explanation. Comprehensive auto insurance covers damages not related to collisions, such as natural disasters, vandalism, or theft. Option. It describes collision coverage. Option C may fall under collision coverage, and option D refers to liability insurance. Question 70. In health insurance, what does the term out-of-pocket maximum mean? A. The maximum amount the insurer will pay for a claim. B. The total expenses the insured must pay before the policy covers anything. C. The maximum amount an insured pays for covered services in a policy period before the insurer covers 100% of the remaining costs. D. The amount an insured pays for non-covered services. Correct answer. C. The maximum amount an insured pays for covered services in a policy period before the insurer covers 100% of the remaining costs. Explanation. The out-of-pocket maximum limits how much the insured will spend on deductibles, copayments, and coinsurance for covered services in a policy year. Once reached, the insurer covers 100% of additional covered expenses. Options A, B, and D do not accurately define this term. Question 71. What is the primary purpose of an insurance deductible? A. To increase the total coverage amount provided by the insurer. B. To reduce the premium paid by the policyholder. C. To share the cost of a claim between the insurer and the policyholder. D. To extend the length of the policy coverage period. Correct answer. C. To share the cost of a claim between the insurer and the policyholder. Explanation. A deductible is the amount the policyholder must pay out of pocket before the insurer covers the remaining cost of a claim. It ensures that the policyholder shares in the risk, helping to deter small, frequent claims. Options A, B, and D do not describe the purpose of a deductible. Question 72. Which of the following best describes actual cash value in an insurance policy? A. The cost to replace an item minus depreciation. B. The replacement cost without any deductions. C. The highest amount the insurer will pay in a claim. D. The appraised value of the property at the time of sale. Correct answer. A. The cost to replace an item minus depreciation. Explanation. Actual cash value, ACV, represents the replacement cost of an item minus depreciation, reflecting its current value rather than the original purchase or replacement cost. Options B, C, and D do not accurately define ACV. Question 73. In which situation would uninsured motorist coverage apply? A. When the insured hits an animal on the road. B. When the insured causes damage to another driver's car. C. When the insured is involved in an accident with an at-fault driver who lacks sufficient insurance. D. When the insured's car is stolen. Correct answer. C. When the insured is involved in an accident with an at-fault driver who lacks sufficient insurance. Explanation. Uninsured motorist coverage protects the policyholder if they are in an accident caused by another driver who either has no insurance or insufficient coverage. Options A, B, and D do not describe situations covered by uninsured motorist insurance. Question 74. What is the primary benefit of purchasing an umbrella insurance policy? A. It lowers the cost of the policyholder's primary insurance policies. B. It provides comprehensive coverage for all types of incidents. C. It offers additional liability coverage beyond the limits of the underlying policies. D. It insures against property damage only. Correct answer. C. It offers additional liability coverage beyond the limits of the underlying policies. Explanation. Umbrella insurance extends the liability coverage limits of home, auto, and other personal insurance policies, providing extra protection against large claims or lawsuits. Options A, B, and D do not correctly explain the purpose of umbrella insurance. Question 75. What does a policy's declarations page typically include? A. A list of excluded perils. B. Information on how to file a claim. C. The names of the insured, policy limits, and premium amount. D. A detailed description of how claims are processed. Correct answer. C. The names of the insured, policy limits, and premium amount. Explanation. The declarations page is an overview of key policy details, including the names of the insured, coverage limits, premium amount, and effective policy dates. Options A, B, and D cover other sections or documents of the policy, not the declarations page. Question 76. Which of the following is an OTA factor used by insurers to determine auto insurance premiums? A. The policyholder's driving history. B. The policyholder's age and gender. C. The color of the policyholder's car. D. The policyholder's location and type of vehicle. Correct answer. C. The color of the policyholder's car. Explanation. Insurers consider factors like driving history, age, gender, location, and the type of vehicle when determining auto insurance premiums. However, the color of a car is not typically used as a factor in premium calculations. Options A, B, and D are valid underwriting considerations. Question 77. What type of insurance policy would cover an injury to a guest at the policyholder's home? A. Collision insurance. B. Liability coverage under a homeowner's insurance policy. C. Comprehensive auto insurance. D. Personal property coverage. Correct answer. B. Liability coverage under a homeowner's insurance policy. Explanation. Liability coverage in a homeowner's insurance policy covers injuries to guests or visitors on the insured's property. This protection ensures that the policyholder can cover medical expenses or legal fees associated with such incidents. Options A, C, and D are unrelated to this type of coverage. Question 78. What does bodily injury liability insurance cover in an auto policy? A. Damages to the insured's vehicle. B. Medical expenses and lost wages for others injured by the insured. C. Comprehensive coverage for damages unrelated to accidents. D. The repair of pothole damage to the insured's car. Correct answer: B. Medical expenses and lost wages for others injured by the insured. Explanation: bodily injury liability covers the medical expenses and lost wages of third parties injured in an accident where the insured is at fault. Helps protect the insured from financial liability related to these damages. Options A, C, and D do not describe bodily injury liability coverage. Question 79. Why might someone consider purchasing a rider for their homeowner's insurance policy? A. To avoid having a deductible on claims. B. To gain additional coverage for items not fully covered by the base policy. C. To reduce the overall premium of the policy. D. To ensure their property taxes are covered. Correct answer: B. To gain additional coverage for items not fully covered by the base policy. Explanation: a rider or endorsement provides extra coverage for valuable items or specific situations that may not be adequately covered under the standard policy terms. Options A, C, and D do not correctly describe the purpose of an insurance rider. Question 80. What is the difference between open perils and named perils policies? A. Open perils policies cover only specific losses, while named perils cover all losses. B. Named perils policies cover only specified events, while open perils cover all events not specifically excluded. C. Open perils policies require higher deductibles than named perils. D. Named perils policies are only applicable to life insurance. Correct answer: B. Named perils policies cover only specified events, while open perils cover all events not specifically excluded. Explanation: a named perils policy only covers losses caused by events explicitly listed in the policy, while an open perils policy covers all events except those specifically excluded. Options A, C, and D do not accurately describe the differences between these types of policies. Question 81. What is the main purpose of the Virginia Property and Casualty Guarantee Association? A. To offer discounted insurance policies to low-income residents. B. To protect policyholders if an insurer becomes insolvent. C. To regulate premium rates across all insurance carriers. D. To provide legal defense for insurers in claims disputes. Correct answer: B. To protect policyholders if an insurer becomes insolvent. Explanation: the Virginia Property and Casualty Guarantee Association exists to cover certain claims of policyholders when an insurer becomes insolvent. This ensures financial stability and consumer protection. Options A and D are unrelated, and option C falls under regulatory responsibilities, not the association's purpose. Question 82. In Virginia, what must a licensed insurance agent disclose when recommending a replacement policy? A. The commission they will earn from the new policy. B. The advantages and disadvantages of replacing the policy. C. The names of competing insurers they represent. D. Their personal opinion of the previous insurer. Correct answer: B. The advantages and disadvantages of replacing the policy. Explanation: Virginia law mandates that agents clearly explain the advantages and disadvantages of replacing an existing policy. This ensures consumers make informed decisions. Option is not legally required. Option C is unrelated to replacements, and option D is unprofessional and unnecessary. Question 83. A Virginia homeowner experiences damage due to a burst pipe. The damage includes destroyed flooring and mold growth. Under a standard homeowner's insurance policy, what is typically covered? A. Only the damage to the flooring. B. Both the flooring and mold remediation costs. C. Only mold remediation costs. D. Neither the flooring nor mold remediation costs. Correct answer: B. Both the flooring and mold remediation costs. Explanation: a standard homeowner's insurance policy typically covers sudden and accidental water damage like that caused by a burst pipe, including associated mold remediation. Pre-existing conditions or neglect are not covered. Options A and C misrepresent the scope of coverage, while option D is incorrect under these circumstances. Question 84. Under Virginia law, what is the maximum time an insurer has to acknowledge a claim after receiving it? A. 10 business days. B. 15 calendar days. C. 30 calendar days. D. No time limit is specified. Correct answer. A. 10 business days. Explanation. Virginia's Fair Claims Practices Act requires insurers to acknowledge a claim within 10 business days of receipt. This ensures prompt communication with policyholders. Options B, C, and D do not reflect the correct time frame under Virginia regulations. Question 85. What is a key distinction between admitted and non-admitted insurers in Virginia? A. Non-admitted insurers do not pay state taxes on premiums collected. B. Admitted insurers are regulated by the Virginia Bureau of Insurance. C. Non-admitted insurers can offer any type of coverage without restrictions. D. Admitted insurers do not require licenses to operate in Virginia. Correct answer. B. Admitted insurers are regulated by the Virginia Bureau of Insurance. Explanation. Admitted insurers are licensed and regulated by the Virginia Bureau of Insurance, ensuring they comply with state laws and regulations. Non-admitted insurers operate under surplus lines rules but are not exempt from all oversight. Options A, C, and D misrepresent these distinctions. Question 86. In Virginia, what type of policy would best protect a business from financial losses caused by a long-term power outage? A. Commercial property policy. B. Business income coverage. C. Equipment breakdown insurance. D. General liability insurance. Correct answer. B. Business income coverage. Explanation. Business income coverage reimburses lost income due to interruptions like a power outage. Option A only covers property damage. Option C pertains to mechanical failures. And option D is for third-party liability, not operational interruptions. Question 87. A Virginia insured purchases a homeowner's policy with a 2% hurricane deductible. If the insured's home is valued at $300,000 and sustains $20,000 in damage from a hurricane, how much of the loss will the policyholder pay before the insurer covers the remainder? A. $3,000. B. $6,000. C. $10,000. D. $20,000. Correct answer. B. $6,000. Explanation. A hurricane deductible is applied as a percentage of the home's insured value. At 2%, the deductible is. Question 80. What is the purpose of the Virginia FAIR plan? A. To provide insurance for high-risk individuals unable to obtain coverage in the standard market. B. To offer reduced premiums to low-income residents. C. To ensure all Virginians have access to flood insurance. D. To fund recovery efforts after natural disasters. Correct answer. A. To provide insurance for high-risk individuals unable to obtain coverage in the standard market. Explanation. The Virginia FAIR plan, Fair Access to Insurance Requirements, offers basic property insurance to individuals in high-risk areas who cannot secure coverage through standard insurers. Options B, C, and D do not reflect the FAIR plan's purpose. Question 89. What type of policy endorsement is commonly used in Virginia to add coverage for personal belongings such as jewelry or art? A. Additional insured endorsement. B. Scheduled personal property endorsement. C. Replacement cost endorsement. D. Lost pay endorsement. Correct answer. B. Scheduled personal property endorsement. Explanation. A scheduled personal property endorsement allows specific high-value items like jewelry or art to be listed and covered individually. Option A applies to liability. Option C changes loss valuation methods. And option D relates to financial interests in property, not itemized coverage. Question 90. In Virginia, what is the penalty for an insurer found guilty of engaging in unfair trade practices under state law? A. Loss of license and immediate closure of the business. B. Fines, restitution, and possible license suspension. C. Permanent revocation of the insurer's license. D. Requirement to reissue all denied claims. Correct answer. B. Fines, restitution, and possible license suspension. Explanation. Virginia law imposes fines, restitution to affected consumers, and possible license suspension for violations of unfair trade practices. Penalties depend on the severity and frequency of violations. Options A, C, and D are overly punitive or unrelated to standard enforcement measures.